Welcome back to Chairman's Briefing and happy Thanksgiving weekend. Brought to you this week by ESGold. I'm Rachel Lee. Let's get into it. The gold market continues writing its intricate story. In last week's briefing, we explored the possibility that those with a bearish lean on gold had been caught offside in a classic bear trap. Yet the precious metals narrative took a quick swerve. Although gold prices were primed for a sell-off on buying exhaustion after last week's rally, reports of a ceasefire agreement between Israel and Lebanon emerged, softening the geopolitical premium that had supported the recent price levels. Now, another factor in gold's decline was Donald Trump's nomination of Scott Bessent for Treasury Secretary, a choice that many see would inject more stability into the U.S. economy and financial markets. Meanwhile, December rate cut expectations have continued to slide. In just 1 week's time, probability measures declined from 62% to 56%. Continued volatility in gold prices is to be expected amid competing signals, but according to UBS, there's room for more gains in gold prices. Pointing to sustained central bank buying and resilient physical demand, UBS has a target of $2,900 per ounce by end of 2025. Goldman Sachs went on record recently with a target of $3,000. In the Fraser Institute's most recent survey of mining companies, the West African nation of Mali is ranked way down on the list in terms of investment attractiveness. Since 2020, the political transformation under Colonel Assimi Goita's military leadership has reshaped the mining sector's dynamics. Nowadays, foreign miners face harsh challenges as Mali's junta demands enhanced economic terms. Take ASX-listed Resolute Mining, for example. CEO Terry Holohan and two of his executives were detained for more than a week in the country over alleged back taxes. Only after signing a $160 million settlement agreement, Resolute's executives were freed and their shares staged a modest 5% recovery in Sydney trading. This rebound merely softened the sharp decline triggered by the initial detention news. Well, it worked like a charm on Resolute. Why not pull the same tactics on Barrick? Barrick confirmed that 4 Malian employees of its Loulo-Gounkoto mining complex had been charged and detained pending trial. According to Reuters, these are the same 4 employees that were briefly arrested back in September. Mali's military leadership wants a bigger piece of the Loulo-Gounkoto pie and roughly $500 million for unpaid taxes. Last month, Barrick proposed to split the concession's ownership in favor of the state, 55% to 45%, but the offer was rejected. Both sides have been attempting to hash out a deal for months. Things are much better for Barrick in Nevada at their Fourmile project. Latest estimates reveal indicated resources increasing 192% to 1.4 million ounces, grading 11.76 grams per ton. Inferred resources advanced 137% to 6.4 million ounces at 14.1 grams per ton, marking a 35% grade improvement from year-end 2023. Now, these results emerge from 25 new drill holes in the southern portion of the deposit, adjacent to Nevada Gold Mines' Gold Rush project. This discovery underscores Barrick's focus on organic growth through exploration rather than premium-priced acquisitions. The Nevada Gold Mines joint venture has added 19 million ounces of proven and probable reserves since 2019. Current resource estimates cover just 1/3 of Fourmile's identified mineralization, and initial economic assessments indicate potential operating cash flows that exceed Gold Rush by 70%. On the heels of selling the Musselwhite gold mine to Orla Mining this month, Newmont is selling again. Just a few days ago, Newmont announced the sale of the Eleanor mine in northern Quebec to London-based Dilmar for $795 million in cash. When Newmont announced the acquisition of Newcrest in 2023, they had originally targeted $2 billion in portfolio optimization proceeds. This latest announcement exceeds that benchmark by $1.5 billion. ESGold is driving cyanide-free gold and silver recovery at their Montauban project in Quebec. The company is now testing innovative extraction methods that could set new industry standards. With production permits in hand and an impressive 142% internal rate of return, ESGold is poised to begin construction on what could become a model for clean mining technology. Aldebaran made an impression on the market with news of a massive expansion at their Alter copper gold project in Argentina. The company reported a staggering 100% increase in their measured and indicated resource, now holding over 22 billion pounds of copper and 5 million ounces of gold. This dramatic increase validates a geological theory that led to the discovery of the Alter United Porphyry deposit, which is one of 3 main porphyry deposits within a single conceptual open pit at Alter. The project is now positioned as one of the largest undeveloped copper gold deposits globally, with a preliminary economic assessment expected in Q2 of 2025. British Columbia's reputation as a mining powerhouse is at stake, according to Association for Mineral Exploration CEO Kirit Judla. With over 60 critical mineral projects valued at $27 billion in regulatory limbo, some companies have abandoned projects or lost funding tied to exploration deadlines. The contrast with other Canadian jurisdictions reveal a widening gap. Ontario and Quebec have established clear regulatory frameworks and have targeted funding programs. Their approach includes structured consultation processes and dedicated exploration funds, precisely the kind of clarity that attracts significant investment capital. For now, it's unclear whether the re-elected New Democratic Party will bring the changes needed to turn the tide. The Mexican government's latest budget proposal signals higher mining royalties, which threatens to redirect $6.9 billion in potential investments throughout 2025. The proposed framework pushes up 2 key royalty rates, backed by the argument that metal prices have risen in recent years. And this is amid broader regulatory changes that have already shortened mining concessions from 50 to 30 years. Another reform aimed at banning open-pit mining remains in the legislature. For Mexico, which is the world's leading silver producer and a top producer of copper and gold, royalty hikes carry significant economic weight. The mining sector contributes 2.5% to national GDP. Industry leaders warned that this additional burden could redirect investment flows towards competing jurisdictions like Chile, Peru, and Canada. British Columbia's gold sector stands ready to welcome its newest producer. Artemis Gold's Blackwater project has entered final commissioning stages, marking the province's first new gold mine since Bruce Jack in 2017. Market recognition of this milestone sent Artemis shares climbing 6.2%, lifting the company's market value. The production profile speaks to Blackwater's scale. Located 160 kilometers southwest of Prince George, the operation targets annual production of 500,000 gold equivalent ounces across its first decade. With the tailings facility complete and ball mill commissioning approaching, Artemis maintains its trajectory toward first gold production in December. And that's a wrap for today. Before you go, please become a subscriber and maybe leave us a thought or two on what you thought of this segment. Thank you for being a part of Chairman's. I'll see you next week.